If you are a high-income W-2 earner making $500,000 in salary and maybe real estate, you're thinking, I'll start a little business, I'll write everything off, and boom, zero taxes. You should stop because you're about to make a very expensive mistake. And I'll say that because I was you. I spent 7 years trying to figure out a business idea starting at 19. I failed at everything from a cake business to a newsletter business. And then I spent my last $8,000 on an accounting coaching program. I grew that program into a 7-figure firm over 8 years, but the road was not easy. I had sleepless nights and threats of lawsuits, and I've lost hundreds of thousands of dollars making mistakes so that you don't have to. So I want you to be smarter than me. In this video, I'm going to tell you my no regrets playbook based on my 15 years of real experiences. 3 rules, 2 napkin calculations, and 1 4-week test so you don't waste money and time chasing write-offs that don't actually make you richer. Write-offs don't mint money, profits do. Note that this video is for education only. You should talk to your personal CPA for advice, particularly tailored to your case. Let's start with reality. A write-off saves you tax rates, not the whole dollar. Let's say if you spent $1, maybe you saved 37 cents, but you still burned 63 cents. Second, the IRS cares about profits motive. If your business looks like a hobby, wearing a business costume, they can deny the losses. And third, chasing zero tax usually creates 3 bills. Bill number 1, stuff you don't really need. Bill number 2, self-employment taxes you did not see coming. And bill number 3, time and energy you never get back. Stay with me because I'm going to give you a simple test you can run this month. No LLC rabbit holes, no S-Corp gymnastics. You know if a business actually helps you or just drains you. Rule number 3. Who are you? Optimizer, micro-operator, or builder? Most high-income W-2 fail into one of these buckets. Number 1, optimizer. You like your job, you want lower taxes, not another job. Bucket 2, the micro-operator. You're willing to build a small, profitable side business on nights and weekends. And number 3, the builder. You want to really grow a real big business. Hire people, maybe take an S-Corp wages, maybe even you want to sell it one day. Why this matters? The math, the risk, and the paperwork are totally different for each one. Don't use builder tactics on an optimizer life. Pick one. Optimizer, micro-operator, or builder. 2 napkin calculations. So here's the part that no TikTok tax hack videos say out loud. If your marginal tax rate is, say, 37% federal, 5% state, so you're at around 42% total, then every dollar you write off saves you 42 cents and still costs you 58 cents. And so here's the ROI test. Would I buy this even without any tax break? And if the answer is no, it fails. Napkin formula. Net cost equal expense multiplied by 1 minus tax rate. An example is if you spent $10,000 on a laptop and equipment gear, that times 1 minus 42% equals to $5,800 in real cost. Now the second napkin test, self-employment tax. New business profits usually pays around 15.3% in self-employment taxes, up to the Social Security cap, plus your income tax rate. On a small side business, once you stack income tax and self-employment tax, you can easily see around half your profits go to taxes. Tiny profit does not mean tiny taxes. The win is net profits plus strategic deductions, plus an extra retirement space, not fake zero taxes. So when does an S-Corp start to make sense? That's very rough. The common rule of thumb is that if your business profits are over $50,000 to $75,000 net, and then if they're consistent, you should talk to your CPA about your S-Corp status and reasonable compensation so that you could reduce your self-employment taxes. But before that, the payroll and admin costs can eat up your savings. Let's talk about the real business test. Before you give the state a few $100s for an LLC and spend 10 hours designing a logo, run this 4-week test. If it passes, proceed. If it fails, you should save yourself a lot of hassle. Week 1, offer and price. Write 1 sentence. I help who, so what problem, by what you do for a certain amount of money. Make a simple 1-page PDF or basic landing page, and then you don't need a perfect website or no branding. You just need that 1 offer. Week 2 is you would have conversations with people. Talk to 10 real people who match your target, and you can ask them, if I can solve this problem for you by this date for this price, would you buy? And you can collect the objections. Don't defend yourself, just listen. Week 3, sell 3. So pre-sell 3 paid trials or take small deposits. And if you can't even sell 3, you don't have a business yet. You can adjust the offer, the problem, or the price, and then you can try again. Week 4, deliver and track. Do the work, track the hours, costs, and revenue. If your net profit is more than $1,000, or at least 2 out of 3 would buy again, you've got a seed. Money change hands. buyers are happy, and you can repeat it. But if you fail this test, you learn cheap, keep your W-2 happiness, and focus on non-business tax moves. I'll talk about this in a minute. So your checklist here would be the offer, 10 chats, sell 3, and then you can deliver and then review the results and repeat. Now let's talk about the pros and cons of actually change decisions. Pros: when it's a real business, you can get bigger retirement space. You can have 401k or a SEP, can be much larger than the day job plan. Real legit deductions, tools, software, marketing, home office, via accountable plan, and more. Potential QBI deductions or pass-through profits depending on your income. You can build equity. You can also build a business that can be sold or it can fund investment. What are the cons here? Those are the hidden killers that most business owners do not know. You would have admin, cash flow costs, quarterly tax estimates, bookkeeping costs, possibly payroll, state filings, self-employment taxes, or payroll taxes. And then if you don't plan carefully, you get surprise tax bills. Hobby risk: multiple years of losses with no credit plan can get your deductions questioned. Overspending: letting the tax tail whack the business dog. I mentioned the audit and hobby losses before. Here's a quick sniff test and a simple paper trail to keep you safer. Sniff test: are you actually marketing and trying to make money, or is it just available? Do you keep your books, track your hours, and change tactics, or it's lost money? Is there a reasonable path to profits between 12 to 14 months? And if your business doesn't look like you're trying to make money, the IRS will not treat it as business. You can also separate your business bank account from your personal account. Keep track of your receipts with things like Expensify or taking a picture on your phone and save it. And then in the receipts, write the notes: who, what, why, and how it ties to revenue. A monthly P&L snapshot with 1 or 2 action notes. Raise price 10% or cancel unused tool, things like that. If you are an S-Corp, a memo on reasonable compensation plan with your hours, your duties, and your comp data you use. You can add an accountable plan for reimbursements like home office, phones, and mileage. So, what should you do this week based on who you are? If you're an optimizer, meaning you actually like your W-2 job, then max out your work plans and check if you have mega backdoor Roth in place, we have a HSA in place, and if you like to give to charity, look at bunching a donor of advice funds or charitable gift financing. And if you have stock compensation, you can get help on RSU, ISOs, so taxes don't blindside you. And consider asset-backed credits only if the deal works, even without the credit. If you are a micro operator, run the 4-week real business test, track every single dollar, set aside money for quarterly taxes. If your net profit grows past around $50,000 to $75,000, it stays there, then you can talk to a CPA about S corporations and reasonable compensation. If you are a builder, run the 4-week test very fast, and then invest in systems like bookkeeping, payroll, accountable plan, compensation study. Set a 12-month scoreboard, have your revenue target, lead target, and cash reserve, and add a monthly tax set aside. Here's a 1-sentence email you can send to your CPA today. I'm an optimizer, micro operator, or builder. My top goal is peace of mind or maximizing savings or growth. What is the smartest move I could make today? Comment playbook for my 1-page 4-week test plus audit proofing checklist. So guys, don't start a business just to chase right off. Start a business because it makes money. Let taxes be the scoreboard, not steering wheel. If this helped, hit like, comment playbook, and share it with that one friend who tells you right off everything. Hope this helped.